price action trading program. The topic of today's discussion is the sixth and most powerful power pattern called as Quasimodo. Okay. So let's proceed, friends. Quick disclaimer. So let's discuss about Quasimodo. So friends, in English literature, in the American world, this particular indicator is called as over and under pattern. How many of you have heard of this word over and under? Anybody? Okay. So what is a Quasimodo? The Quasimodo is called as a double cheater. That is a name I gave to this particular indicator. It is the sixth most powerful pattern in the advanced price action family. One of the most powerful power pattern in the entire gang for various reasons which we will discuss in the subsequent slides. You all know flag limit has one engulf in unidirection. FTR has two engulf in unidirection. Caps has a single engulf in reverse direction. And how about swap? Anybody? Swap is an engulf of what? Swap is an engulf of a power pattern. Okay, it's an engulf of a power pattern. And we also learned about the can-can pattern or the dancing lady pattern, where it is a cap fueled coupled with compression. While QM has an engulf on both directions. You know, in FTR you have an engulf in the same direction, whereas QM has an engulf on upside and one engulf on downside. So that will add up to the confusion. It cheats both buyers and sellers alike, creates maximum pain for all of them before it takes the next course of action. So when the price is when the price cheats both buyers and sellers, what happens? Okay, they'll panic, their stop loss will hit. Because of panic, they'll it adds up to their confusion. In confusion, they may end up taking more trades in either of the direction. It will be an absolute chaos. And finally, they will feed the liquidity of the institution. So here is the story of a trend. We have been talking about trend. What is a trend? A trend is a series of patterns where the price proceeds to form higher high, higher lows, higher high, higher lows, and continues to form many higher high, higher lows. And this is called as an uptrend, correct? Which means price is moving up, it is coming, and the buyers don't want the price to go down, they're pushing it up, up, up. At one point of time during the journey, the price makes a higher high, but it doesn't make a higher low. It makes a lower low. So what does this signify? Muthu and Vikram says trend is broken. Okay, Ram says the higher low is engulfed. Okay, and Prakash, Narayan and others says change in trend. So friends, the point here that we need to make out is it is a reversal possibility. Divya Khan says it is a possibility of reversal. Absolutely. This does not mean the trend has changed. This does not mean the trend has ended. This does not mean the trend will continue. It just means there is a possible change in the journey. The change can be, it can either be a consolidation, it can either go and jump and kill the higher high to form a bigger value, or it can go further down. All three possibilities exist, right? What is your ground rules to say that boss it will come down? Okay, Urjil is telling no more buyers at higher low. What if this higher low price take support and rallies? Okay, these are all possibilities. Now, the only key point you must know is once a higher low is broken and a lower low is made. So this is an high, this is a low, this is an higher high, this is a lower low. Can you make out this? This high is engulfed by this higher high and this low is engulfed by this lower low. For example, this is 1, this is 2, this is 3 and this is 4. So I want to say that 2 has engulfed 3 has engulfed 1 and 4 has engulfed 2. Can everyone confirm me this point? Okay, so is it not 2 engulfs? So what is the difference between this engulf and the FTR engulf? This is your FTR. This is your FTR. Whereas this is it has engulfed. This is H1, H2, L1, L2. This is H1, H2, L1, L2. So can you make out in this case only H1 is engulfed? In case of FTR, only H1 is engulfed, and not only that, it is engulfed in the same direction. This engulf is also in same direction. This engulf is also in same direction. But here H1 is engulfed in the upside direction. I'm sorry, this is L1. My mistake. Sorry. I am sorry. I am sorry. This is H2. Yeah, thank you. Okay. So H1 is engulfed by H2 and L1 is engulfed by L2. Both happens in opposite direction. Though here the amount manipulation, amount of cheating, amount of confusion is always high. Okay. All right. So that is the story of a trend. Now, once the trend is broken, okay, in this case you can confirm the trend is broken and price forms series of lower highs and lower lows. What is this? This is a classic downtrend. All right. Now the area between your high, the high and the higher high, this entire region is called as Quasimodo region. And most of the times price comes and tests here and then take a trade. All right. So why it takes, how it takes, we'll discuss. And there are many Quasimodos which fail. We are also trying to understand and learning deeper. There's a huge literature on this topic. I'm still going deeper on this subject. In the subsequent sessions, I will help you and teach you more. Okay, which side is cheated first? Can someone tell me? In this example, which side is cheated first? Look at the price journey. The buy side is cheated first. Okay, good. Now, I'm talking about these buyers. How cheating happens? I'll just mark it for you. Now there are, this is a high. Okay, this is high 2. This is low. This is L2. Now, what happens is, think about who will buy here. When price goes there, who are those buyers? They're all breakout traders. It can be new traders or old traders, that's different, but they're all breakout traders. Now, where is their stop loss? Correct? This is the stop loss. I'll make it as breakout. Now, think about the journey of this breakout trader. Okay. Now, what I'm saying is, when price comes here, the breakout trader is very happy. He's very happy. Why? He's in profit. Now, once price touches H2, once he comes here, 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 you think panic will sink in? Panic will sink in, and when price crosses this level, what happens? Stop loss will start hitting. When price comes here, do you agree all breakout trader stop loss is hit? Okay. Now price comes here. Who will buy here? It is not SR traders. Again, breakout traders only on the short direction. Breakout short. Now, please tell me who will, where is the stop loss? Correct? This is the stop loss. Now, when price forms a lower low and then if it hits back, so all breakout traders on lower side killed. Everyone understood this phenomenon? Where is the cheating? Where is the cheating? Who is the cheater? On which side is the cheating? So it is both side cheating. Both are cheated, both are confused. Now there's a question from Vicky. He says, but they can trail stop loss. You can trail, how long you'll trail? You are not Amazon to run a e-commerce company in India for 10 years without profit. Correct? So, in a nutshell, there is a two-way confusion created. Now, there is a simple question. What will this guy do? For example, what will a trader here do? This point. What will a retail trader do here? It is cheated here. It is cheated here. Now what next? He is in a state of confusion. Some says be silent. Okay, wait. And how many of you remember if that so-called breakout trader, okay, once he stop loss it, many guys they'll either take a stop loss, sometimes they even take reverse order. How many of you agree? They will take short, no? Some guys are smart. Once they take a long stop loss, they'll put double lot stop loss where they can go reverse. They are called as what do you call them? Continuous traders. No, it's a unique name for it. Stop and reverse traders. No, not even that. That's a correct proper technical term. Is it right? SAR traders. Okay. No, I know there's one more beautiful term for that. Anyway, okay. Now here this guy is confused. Okay. Now that confusion leads to something else. We will talk about it. At least we understood the concept of confusion. So here is the anatomy of supply Quasimodo. A high is formed, a low is formed, and here is high is formed, a lower low is formed. Do you see the pattern? Can you make out the double engulf? Okay. Now we just mark the region between an high and higher high. Okay. That region is called as supply Quasimodo region. Okay. This is just the pattern, not a power pattern. I'm just trying to explain you how it looks. Okay. In future, when you see this pattern, you should recognize, okay, there is a Quasimodo pattern here. Power pattern, there are some aspects that we need to follow. Okay. Now, when price comes there, we ideally want to trade. Okay. The concept is, the confusion is here. When these people are cheated, when these stop losses are taken out, when these people are cheated, when these stop losses are taken out, at this point of time, they're confused, but we take a trade here. Okay. All right. Let's go further. Here is the anatomy of their demand pattern. Okay. First, a low is formed. What is this? What kind of an SR? It's a minor SR. Thank you. A high is formed. A lower low is formed. A high is formed. Is it correct? Can you make out? Now, at this point of time, the low and lower low are formed with a rectangle. That is the region of Quasimodo. Any confusion so far? Now I will add the flavors of authentic zone and other things. That's when the challenges rise. Both high and low are engulfed. So where is double cheating? I guess we saw. Does everyone understand where double cheating is? In simple words, I'm going to repeat it. The moment this high is broken out, all the breakout traders will take long trades. They will do buy. All are buyers. And they'll always keep a stop loss below. Okay, here is their stop loss. Now what happens when the price comes down? The stop loss is eaten here. So all of them are cheated. Okay. Now, second, when price comes here, when it breaks this low, again the short side breakout traders will get into action. And their stop losses are here. When price comes here, they're all cheated. Here the long breakout traders are cheated. Here the short breakout traders are cheated. Think about it. Sendil says, Ashok, but you told probability of cheating is less on a higher time frame. It is very, very high on a lower time frame. But sir, the fact of the matter is you can notice cheating on higher time frame. It's very difficult to notice cheating on lower time frame. For example, one of our colleague from edition 5, Ratish, was trying lot of Quasimodo games in 1 minute time frame. He got multiple stop loss hit. Okay, and some trades we saw, some were good, some were wrong trades, but some of the good trades were also hit. Okay, without any reaction. Okay, so at lower time frame at 1 minute to 5 minutes, generally there will be lot of liquidity, because institution can keep moving, right? Do you understand? In the, for example, if you imagine that Taliban versus the smoker scenario, the smoker is 100 meters away, he cannot throw the bomb till that point. But imagine a guy who was sitting in the first row of meeting goes to second row. Sendil, that's the classic response. Imagine a guy going from second row to third row or fourth row, fifth row. Ultimately, everybody will be beaten, no? Can you explain double engulf here? This is one engulf of H. Engulf H is engulfed, and number 2 is engulf of low. Okay, now friends, throughout our conversation, we always told an engulf means the price has to close above the high and below the low. But with effect from Quasimodo, we don't bother about the closure. If it breaks the high, we are okay. If it breaks the low, we are okay. Everyone get that? Kindly give me a check. I repeat, until the fifth pattern, we believed engulf is closing above or closing below. From Quasimodo onwards, even if it breaks the high, we will take the trade. Kindly recognize that and remember that when I take examples, you will know. It's even wick to wick, not need not be just body but wick also. Clear? Sounds good. Now in this conversation you are only seeing cheating of breakout traders. What about support resistance traders? People who trade double top, triple top, double bottom, triple bottom. What happened? What will happen to them? We have not yet spoken about them. We will talk about them today. Now is Quasimodo a head and shoulder pattern? Everyone play these games, right? Ascending triangle, descending triangle, wedges, triangular pattern, asymmetric pattern, cup and shoulder. Now this is an high, this is a low, this is a higher high, this is a lower low. So is this a Quasimodo? It's a Quasimodo. Why both side engulfed? Correct. Now look at this. High, low, higher high. This is your head and shoulder. Yes, Manish. Friends, can you make out? See, you can see your you can see your shoulder. This is your face. Okay, now tell me the difference between these two. So high is engulfed here, but low is not engulfed. But as here, low is engulfed. Here, high and low both are engulfed. Okay. Now, which is better here? One side cheating or double side cheating? It's more cheating is more beneficial. So double cheating is much better. Okay. Now, can I say that a Quasimodo is also a head and shoulder pattern? Because if you look at Quasimodo, even this like your shoulder, left shoulder, right shoulder, and this is your face. I can say it. A Quasimodo is also a head and shoulder pattern. But can I say that every head and shoulder is not a Quasimodo? Every Quasimodo is a head and shoulder pattern, but the converse is not true, which means every head and shoulder need not be a Quasimodo. That is the strongest message. Okay, now let us talk sixth power pattern, the demand QM. Now you know what a Quasimodo basic pattern looks like. Now let's focus on the Quasimodo power pattern. What is this, friends? It's a drop based drop and it's an authentic zone. It's an authentic supply zone. Now price forms a low, it forms a high, it forms a lower low, it forms a higher high. So what pattern you got now? We got a QM pattern now. We got a QM. Not only that, the lower low of the QM not only engulfed the high, but also engulfed an authentic zone. Okay, when you find a QM which can engulf an authentic zone, that is more powerful. Everyone knows why. In case of cap, you are engulfing an authentic zone, that which is nothing but a reversal power pattern. In this case, a Quasimodo, if it engulfs an authentic zone, that means this bugger is very, very strong. This guy, super strong guy. Okay, it is at that time the Quasimodo demand zone is actually formed, and when price comes there, we will mark our proximal line, distal line, and then take our trade. Everyone get that? So the key point is, okay, lower time frame, many times higher time frame Quasimodos work extremely well even without an authentic zone engulf, but lower time frame, mandatorily you will look for a Quasimodo which breaks an authentic zone. So Anand is asking, how does it differentiate from cap? How does your cap work? The cap works like this: authentic zone, high. This is your authentic zone engulf. This is your cap. Whereas Quasimodo is does this guy have an eraser? No, he doesn't have an eraser. You have to erase everything. Okay, I did a mistake. Let me redraw. Yeah, this is an authentic zone. It will be like this. This is your AZ. This is your cap. Okay, and then friends, can you make out the difference in this journey? Cap is just an engulf of an authentic zone, whereas QM, it is double cheating plus engulf of an authentic zone. Can QM consist of a cap? Imagine this. Someone is asking, can QM, what is this then? Chandra? Chandra asks, can QM consist of a cap? Remove this portion and see, does it not look like a cap? Okay, sounds good. It happens. Now look at supply QM. There's an authentic zone formed. High, low, higher high, lower low. Okay. Supply Quasimodo. And now there's a question from Shivangi. She's asking where should be the authentic zone. See, one authentic zone can be here. What if here this is an authentic zone? Now among these two authentic zones, which authentic zone is best? Which is more critical? One or two? No. Always one is most critical because that is the nearest and latest authentic zone. Muthu, is that clear? The authentic zone which is nearest to the bus stop. Excellent. That's the right way to say. Thanks, Anand, for reminding me. The zone that is very nearest, that authentic zone is critical. Then there is no end to it. What if there is one more authentic zone here? This is also authentic zone. Anything that is happening very near to you is the key. Recency. Thank you, Ram. That's a good statement. All right. So price reacts. Now give me your clean focus, please. Okay. This is the last pattern, that last scenario that explains it. This is an authentic supply. Price is coming and forming a low. All right. It formed a high. It formed a lower low. It broke the authentic zone. At that point of time, when you mark the zone at the low level, there are two levels actually. There are two levels, friends. One is the QM level, another is a MPL level. Okay, for your kind information, this particular line, the line of L is called as QML, Quasimodo level, and the line of LL is called as MPL, which means maximum pain level, maximum loss level. Okay. Any questions here? Now what happens? See, till now I was marking this zone. I was marking this level. Okay, this is as a Quasimodo zone overall, but level you can either take an entry here, stop loss here, or you can take entry 1, SL1, or you can take entry 2, SL2. Everything depends upon the zone formation, base formation, and other micro aspects. Everyone clear? This is like your QM. This is like your not QM, the caps, where you have source of engulf, origin engulf, and so on. So you can take entry anywhere, exit anywhere, but there are some points where you don't get a filling at all. Which is the most significant safest? MPL is the safest, no? Because that is the farthest. Clear? So I am hoping everyone understand this concept. And exactly where is E2, where is SL1, SL2, that we don't know. When you see chart of that particular chart, every chart vary depending upon the price structure formation, the base formation, the momentum candles. You will mark it. You know what is zone marking. So adjustments you can do there. So there's one interesting question by Sagarika. So she's telling, sir, while breaking L1, is it mandatory it should break at once? So her question is something like this. Is only this one Quasimodo, or can it be is that the question? It is, of course. And this is just this is classroom example. This is 2 to 2 to 10s are 20. Classroom is always easy. Reality is 2 to the power of 10. Is that clear? Okay, those of you who might find difficulty in reading candlestick chart, go to line chart. In line chart, you will be able to find ultimately what is the key point. There has to be two engulf. I'm seeing two engulf here. Engulf 1, engulf 2. I'm done. He is killed. He is killed. Okay. Now when price comes back, it can react from QM. It can react from MPL also. So where we take trade, it all depends on individual examples, but kindly understand both are correct, both are fair, both are logical. Now, which is the best place to take that? As we see more and more charts, when we see 20-25 QM charts, we'll understand. Everyone clear? Any questions here? Confusions before we proceed to the next line? In simple words, we want a QM pattern, 2 engulf plus a Quasimodo engulf, I'm sorry, plus a authentic zone engulf. That's what we want. PO is asking Ashok, if MPL is broken, can we double and take an opposite trade? No, definitely no, because we don't know. We need to watch it. Now, there's a question from Sendil. Ashok, if an authentic zone is not there, is it till QM? As a pattern it is, but it's not a power pattern. If it is having authentic zone, it is fantastic. Now, let me mark something. This is QM. Yeah. Now, if price goes and breaks, Okay, so what do we do? What is this? This is a possibility of an opposite QM. The supply QM failed. How it is opposite QM? Anas says he did not understand the logic. I'm explaining once again, Anas. You have a high, low, higher high, lower low. So this is a QM level, which you consider to be a good place to play. Now what happened? It formed a lower low and price went up and broke the QM. When the lower low was broken, is this not low, high, lower low? Is this not a QM? This is a demand QM, no? Okay. Now Shivangi is telling, will it not be an FTR? I'll show you what happens now. Instead of not making a low, for example, this is high, low, higher high, lower low. Okay. Now instead of this, if it goes high, low, higher high, what is this? If it doesn't go on from a lower low, there is a scope for it to become an FTR. That's all. Okay. Another way of looking at is this is your QM level. Price went and broke it. When it broke, it can make some formation here. What is this? Why? This your MPL is a big SR line, no? What is your MPL? Or price can go so we need to see. Now let me throw one more thing. This is the biggest mistake most people do. Is this QM pattern? Both QM? Yeah. Now this QM, the demand, this is the best QM. Why this is the best QM? The reversal comes after significant rally. Here there is no reversal. This is opposite trend continuation. So this can be fake. This need not be all-time high. This can be like this also. I'm sorry. Yeah. Okay. You can trade like this also. So how we trade QM, we will learn in the charts, in the examples. I am sure every one of you will face hundreds of challenges when you are marking, which is normal, which is natural. We will slowly learn one by one. Here is the Quasimodo short scenario. There is a zone. High formed, low formed, higher high formed, low got engulfed. So this is a QM. Not only low got engulfed, also the authentic zone got engulfed. Now, if you tell me, suppose if this is an authentic zone, for example, rally, there is one to base. Okay, let's say here, hidden here. Then this is most important. The most nearest authentic zone, please kindly remember that part. Okay, we'll have a QM level, you will have an MPL level, and when price comes to QM, we expect to react. When price comes to MPL, we expect to react, or else I can just mark the MPL to high, this region, the whole Quasimodo zone, this one. So this can be my entry, this can be my stop loss. Now the rules of QM. What are the rules, friends? High formed, low formed, high broken and higher high formed, low broken and lower low formed. An authentic zone is engulfed. Trade on retracement. Fifth one, authentic zone is not mandatory but very highly probable, and authentic zone is mandatory in lower time frames. If you are trading in 1 minute, 5 minute, 15-minute time frame, please look for authentic zone. On higher time frames like daily, weekly, the manipulations are very low. It's easy to trade them without authentic zone also. Okay. Sendil, I don't understand your question. Can you repeat it, please? So where will QM generally appear? The QMs that appear at all-time high are best. Go and check in Nifty and Bank Nifty. Nifty formed a QM and that it didn't even give an entry, whereas Bank Nifty formed a QM, it gave an entry also. Now we have learned the pattern. I am giving the hint. Please go and check it. Nifty form, both of them formed QM, but Bank Nifty gave an entry. Nifty QM is not yet given the trade. Okay, QM occurs always after significant rally, and then only the manipulation to create liquidity to dump the stocks. Okay, without a trend, don't expect QM. This is not a QM. For example, you can't mark this and say, sir, this is QM. Everyone understand? Just because you find a low high, lower low, higher high doesn't mean it's a QM. That is my warning. Divyakan says, yes, sir. Bank Nifty, it gave entry too. I have marked it. Okay, nice. But try to mark Nifty. There is no entry. Nifty Quasimodo is not even tested. It is still fresh. Daily time frame. Always look for fresh zone for the QMs. Never trade tested zone, friends. We are all beginners. Let us focus only on untested zones. Make sure the distance between QM and MPL is not very high. Why is that? Is that clear, friends? Is this sensible? Yeah. Never ignore level over level. Majority of you are missing hitting stop losses because of level over level. So put that as a warning. So things will shape up. So any questions till now? We'll take a 1 minute pause. Any questions, please shoot it. And then we will go into examples. Yes, Vikram, that is right. Friends, when we say best QMs appear at all-time highs, it also means all-time low also. Thank you. We'll look at more trades. Okay, chalo. Now, friends, look at this example. Look at this example. Okay. So this is a high level, very simple direct Quasimodo. High, low, higher high, lower low. Okay, lower low is formed here only. Okay, it need not form here. Even if it comes here and does done, this is lower low. That's all. Okay. Now look at the way it reacted here. And friends, what is this? What is this? Compression. Brilliant. Now you guys can make out what resulted in that. Compression is a very important and very crucial thing. It is a blessing in disguise for mainly positional traders. You can look for long returns. Okay. And here is the authentic zone. Rally base rally. Is this example clear, friends? Somebody is asking, can you mark QM and MPL here? Okay. Now this is my high and higher low story. This is the overall QM level. If I have to draw this is my MPL, this is my QML. Now if I want to mark the zone only at MPL level, look at this rally base drop. If I mark body to wick, it give an entry. Here at the QML level, have a look at it. See this zone. It's a huge zone, and that too within compression. I can ignore it. Okay, because of these big base candles we ignored it. The safer side was the top of the zone. See, majority of the times this is our entry, this is our stop loss. Okay, that never changes, but because of this, depending upon base formation here, we can reduce it, that we'll discover case by case. Keep marking each and every zone I mark, then keep throwing questions, you will get a fair idea of how we have to approach it. Vilas says, Ashok, is it immaterial where LL is from? Yeah, it's very immaterial. It's very immaterial. Okay, but our requirement is simple, it has to engulf, that's all, nothing more. Now, there's an interesting question, Ashok, can we trade 2 TB? I doubt you have to trade 2 TB because of multiple reasons. Number one, this base is too big. This is, see, rally, base, and drop. To be honest, this zone is already tested here. How many of you notice? This is not FTB, this is 2 TB. This is not even 2 TB. If I mark zone to zone, this is FTB, this is 2 TB, and this is 3 TB. How many of you observe? These are all small things which you need to observe in trading. Can everyone look at it and reconfirm? Go on cross check why I call this 3 TB. Santosh is asking, Ashok, is it not a cap? I'll have to redraw it again. Friends, what is this? Let's say, what is this? What is 1? 1 is a cap? Okay. Thank you. Now what is this? Santosh? Okay, understood, Santosh. The cap is hidden in a QM. Good, very good. Now look at this example. Krishna says, Ashok, do we have to look at key enhancers in QM? Of course. The key enhancers are must. The key enhancers are must. Okay. Prakash says, Ashok, but generally we don't take trade on 3 TB, right? We never take trade on 3 TB. We take only on FTB only. But point is between high and higher high, it was fresh. So I thought of the trade. That's all. My point was, when I marked between high and higher high, I knew it was fresh. That is why I took. Key enhancers are absolutely universal for all patterns. No compromise. This is one pattern where we can expect minimum 1:5. Actually, tomorrow we have a special session called RR enhancement. I will show you on a micro level how to mark and reduce your RR to make a minimum of 1:5 trade. Can swap happen in QM? It may happen, but every QM swap gives a different scenario. For example, look at this. Okay, this is a level. Case 1, case 2, case 3. Now price is going now. Okay, from here it will travel this price. Okay, now when it is going, it can break. When it breaks, this becomes my what? Opposite QM. Now when it grow and break, it can break as a base. It can break, come down, forms a zone and then go FTR. It can do multiple things. And it can also create one more power pattern which we will discuss. Okay. Authentic zone should be formed after HH, no Anas. It has to form just before HH. It can be formed after a high, but not after higher high. Vikram and Anas, is it clear? We'll write it, no worries. Look at this guy. Okay, to be honest, this is the high. If you look at this example carefully, this is the high and this is the higher high. How many of you can make out? The QM is already there and this guy is a reaction to that QM, and it's a small fake out. He cheated and then put the price down. Okay, now if you take this high, for example, if you take this high and this low, this lower low and this higher high, and this is a zone where you can wait for a trade. I don't know, you might have got this trade also. You can check it. This is authentic zone here. In the first case, there is nothing. Why? This is all compression, too much of compression. See, this is all compression only. That is why this fall came. Straight line fall. And as we discussed in QM, there's no more engulf or close above. It is just breakage. Even if it is broken, we consider that as engulf. Only in case of QM. Why? Because we want cheating. Cheating is more when it forms higher high and fall without closing above and all of that. Yes, Anas. First one you could have traded, okay, but probability of entry would have been lesser. It reacted so well, but you might have missed an entry. Now this is, look at this example. This is beautiful. Okay, this level has not come, it will come very soon. Can you make out the manipulation? Now think about it from a QM construction angle. This is an high. How many breakout traders are locked here at higher high? See, it is high, low, higher high, lower low. and it's broken an authentic zone also. The source of engulf of this authentic zone is this. So I am proud about this zone. Santosh is telling Ashok, I am also one of them who are stuck. What was your price? Oh, 170. I'm sorry. Now look at this example. Such a clean structure it is. I just marked the top. Okay. To ensure it is 2%, I took the higher high and the close of this candle. I mean, open of this candle as a zone. Okay. Zone marking, I can do anything. That's my comfort. Okay. You can take this whole thing as a zone, authentic zone. Actually, watch out. There are so many levels. This is Bank of Baroda. Can you take this trade, friends? Why? So it is doing distribution. So we should not take such zones. We should not trade such zones. Now take up this SR line. It's a beautiful SR line. Huh? How many of you agree this level is great? Why? Because number one, okay, this is a gap. This is like a flag limit gap. That's why these trades were working. Now immediately after this zone, this level, look at this. This is a line cutting through the point. What is this, friends? What is this rectangle? It's a flag limit. Yeah, you can wait for that flag limit, but this one we should not trade because this QM is not a good QM. It's a bad QM. Just because I got a high, low, higher, high, lower, low doesn't mean I need to trade. This is where we fail. This is Bank Nifty. This is the one which we was telling. High, low, higher, high, lower, low, kissed and fell. Yeah, Dibyakan, this is one you are telling. Okay. And the same beautiful pattern exists in Nifty, but Nifty is not yet tested, which means Nifty, the entry for Nifty has not come. Only Bank Nifty gave an entry. Okay. There's one question from Ehsan. It says, in previous example, is flag limit superior than QM? It's not about superior or not superior. First of all, both are different because they are happening with a gap of almost 10 to 15% of the range. So they are different zones, entirely different forts. But this fort is beautiful and very strong. Why? It broke the zone, severe drop, a small fight, again gap down, lovely fall. And if it comes with good compression, definitely we can have a good trade there. Yes, we can trade that flag. I don't see any reason why we should not. Um, yes, Amit. There are people who clicks well with some specific pattern. If you guys ask me, statistically, my FTRs does very well than flag limits, which I have noticed. That too, it was told by one of my friend. So some people are very choosy. Some people trade only FTR, some people trade flag limit, and so on. Okay, so Vilas, but Ashok, here the trade takes lot of time. This is lot of time just to explain the examples. In higher time frame, manipulations will be very less, so it's easy to identify them. If you go to very lower time frame with so much of wick candles, extensive ERC based candles, it's difficult for you to market. So for you to have a clarity on structure, these examples are taken. In our weekly reviews, we can verify intraday levels. Okay, this is Adani. Okay, rally, base, rally, high, low, higher high, lower low. I can call this, this can be the latest authentic zone 2. Okay, and this is another nice manipulation, a fresh zone, I must say. See, this is one flag limit. How many of you get this? This is manipulation area we cannot play. So we can play this zone QM, this one flag limit. Yeah, ERC is there. We can probably go on a lower time frame and find a better candle. We can reduce the risk. This is a fresh Bharti Airtel candle. Oh, higher high, low. Okay. Okay. We'll wait for this. But somehow, friends, I believe Bharti Airtel fair value is around 250 only. The valuations are not justified with whatever numbers they have achieved. Okay, friends, one interesting question. Sendil is asking, can you take this small swing also? Why not? It's manipulation, no? Ultimately, he broke that high, no? See, ignore this small swing. Take this as a swing. See, mark zone markings, friends. It's your choices. Okay. Here I took the rally base drop. I didn't take this guy. Why? Because I felt this is a big zone. So I only take the whole base. Why? You can also take this one. No. You can also take body to wick. Okay. Sidhu, mark that chart. The gold chart which you are talking. We'll have a look at it. And look at this guy, Divi slab. See, here I took only the high and marked it. Why this zone is super for me? Look at the fall. Look at the departure. How much it has fallen? See, generally what I do, friends, in this region, the best way for you to trade is, if price comes here by any chance, you should just buy next month put option. You'll have 50 days time. Even if the stop loss is hit, you will not have fear. Many times what happens, most people crib is this. Price comes back, it chokes up and then falls. Stop loss hit. Operation success, patient died. So Anas Patel says, Ashok, main fall is due to COVID. So do we expect similar pressure? Don't you think? Irrespective of what is the reason, don't you think there are so many orders, so many sellers aggressively sitting to push it down? Imagine how many who didn't get a filling. Look at this guy. See, this is the high, this is the higher high. Hardly 2-3 points. Imagine the cheat day here. Good statement from Meenakshi. For some options, put option not available for next month nowadays. Then we have to roll over. We need to buy an option this month, and then play with stop loss. And next month, when it is liquid, we have to buy. I agree with you. That problem exists. Friends, do you guys understand why this high and this higher high? Why did price just go only 2 points and bring it down? Imagine how many guys at this high got trapped. Exactly. That is best cheating. So coming to the summary of QM, it's the 6th most powerful pattern. It's also called as over and under pattern. Do Google. I have lot of literature on this. I am still going deeper on this subject. Okay. Unfortunately, because of this Trader Gurukul and its project, I could not go over it. I have spent a lot of money to extract the literature on these things. I'm going to slightly innovate and try to come out with more lucid informations on QM, because I love QM a lot. I truly love QM as a pattern. And one thing is, some QMs fail. Okay, again, everything is a science. We need to go a little deeper. I am learning. I'm studying. Okay, so we need to understand that behavior of QM. So as time progress, your maturity on the subject of price action will improve. Okay, because I know how much I have improved in the last 2 years. I have definitely improved significantly, but that doesn't mean that's not enough. As a subject matter expert, you need to keep learning and try to go deeper and deeper. You need to have ready-made answer for many scenarios. Okay, and it's a double-ended cheater. You know why? You know what is the concept of cheating. You know who are cheated. Who are cheated in QM? Mainly the breakout traders on both sides. It is very powerful when a QM is fueled by an authentic zone engulf. That is very precise. Lower time frame authentic zone engulf is must. Why? If I don't put that class in a single chart in a single day, you will get 10 QMs. With this, we come to the end of this Quasimodo session, and what you have learned is only normal Quasimodo. Okay, and for your information, there is something called as advanced Quasimodo. We will take it up tomorrow. Everyone clear? Quasimodo has at least 6-7 flavors. So in the next session is all about the deeper aspects of Quasimodo, and it will expand. Praveen, yes, yes. Praveen, the new topic for this episode is harmonics. I will inform in the master channel about it. Okay, and there are some new topics introduced in WDGAN. I have not even finished that, so I need to take up WDGAN next week, and next month, next week, I will take up harmonics. Those topics are completely new. I'm going to invite everyone from the first edition to the last edition. Yes, master channel keep. I'll update in master channel and the latest edition group. So don't worry. You just have to keep the notifications on. Okay. So the friends, get ready for the next. Now what happened? The institutions notice that there is no liquidity. There is no retail participation. How will they know that there is no liquidity? How do institutions know there is less liquidity? Volumes. Price don't move much. Not only that, they don't get filling. When they put big order, only a small portion of it is getting filled. So they are not finding orders getting filled. In simple words, if you take the example of Taliban and the American forces fighting the war, when the helicopter goes to the meeting area to drop a bomb from the skies, they see hardly 10 people meeting. They expected 100. They see 10 people conducting a meeting. Will they drop the bomb, which is $1 million bomb? They will not drop it because their budget to kill one terrorist is just $10,000. There are only 10 people. So the cost of killing each guy is almost $100,000, which is very costly. What will they do? Two things. Number one, three things. Number one, they drop a bomb. They don't care of return on investment. They just drop a bomb. Number two, they will wait for the people to participate, and then once the numbers increase, then bomb them. Number three, just walk out. Okay. The fact of the matter is, the institution will never do 1 and 3. They will never go back, nor they will bomb a small crowd. They will wait for the people to assemble. They will organize them. And that's what is going to happen right now. Now, price comes down when they sense that there is less liquidity. They will not move the price further. What they do, they just create first a temporary SR line. What is that? Is that an SR line, friends? Okay, it's a minor SR. Now, there are two kinds of trader. How many of you remember? One is the cheetahs, the second one is the tigers. Who are the cheetahs? The breakout traders are the cheetahs. Now, did the breakout happen here? No. What happened? The price reversed at a support level. So who will come into action first? Right now, when the price is here, who is the first person who is thinking to take the trade? The retracement trader, predominantly the support resistance trader, who trades double tops, double bottoms, correct? Now that double top, double bottom trader, he waits for the price to come here and react. If he takes the trade, where is his entry, friends? Don't you think this is his buy? How many of you agree this is the buy level of SR trader? And this is the stop loss. Everyone agree? Okay, thank you. Now please notice it. That was a support S1. Now price comes to that level and booms. Okay. Now, did the SR trader win? He got his trade. He's happy. Okay, he won the game. He's very happy. Now, what is this breakout trader, the breakout trader doing now? He's waiting. Okay. Now the minor SR became major SR. Okay. Next question. When the price came to S1 and moved up, there were maybe 1,000 breakout traders waiting to trade. Now, once the price reacts from the support level and create a double bottom, now will the breakout traders increase? It will increase, correct? Okay. Can I tell that the breakout traders put orders here? Okay. When he put a order there, what order is that? It's a short order. Why he is putting the order there? He's putting the order there because it is a break of the strong support. Correct? Very good. A major SR line. Now, when he puts the order there, now tell me where is his stop loss? Everyone agree this is stop loss? Now, can we all conclude this? The entry of a support resistance trader is the stop loss of a breakout trader, and the stop loss of the support resistance trader is the entry of the breakout trader. Is that, can I make that statement? Awesome. Thank you. Now, you all know the SR trader has won. Now, this breakout trader is waiting. Correct? Now, even he will have patience. Though he is a cheetah, he will go and chase the price only once he is confirmed that it has happened, after it breaks that barrier. Now, that is support S2. Now, next price comes back. Now, what is the situation of the SR trader now? He won a trade. He won his double top. I'm sorry, double bottom. His double bottom trade worked. He is very happy. He's a winner. So what will he do now? He will trade triple bottom. He will take trade again. All right. Now he took the trade. He took the trade and he is happy. The SR trader played double bottom. He trade triple bottom also, and he is happy. Now, what is the situation of the breakout trader? Don't you think more breakout traders come now? Why more breakout traders come? It's a more stronger resistance support, no? Since every time that the level is tested strongly, okay, according to the principle of traditional patterns, that is a strong zone or a strong support. So if that support is broken, the breakout trader will think, wow, the price will go down, I will jump in. According to the principles of zone and price action, your zone is becoming weaker. But by all traditional standards, a strong support is one where price tests longer. Okay, now the euphoria starts. A lot of There are two kinds of people: lot of breakout traders desperately waiting for a trade, and lot of SR traders extremely happy with their success. And suddenly, at one point of time, price breaks that zone. Now, what happened to the players? Now, tell me what happened to SR traders. All the support resistance traders are killed. Almost all buyers at that level are killed. If they had taken partial losses, they would have been happy. Okay, now there are two kinds of people. Okay, not even two kinds, there are three kinds. There are some smart guys who believe stop loss is the ultimate truth in stock markets, and they would have kept a stop loss here. Correct? So they stop loss it, they made some money, they lost some money, overall they are in profit, some of them are happy. Now it's case two. There are some people, okay, who go with a trend. What portion of SR traders will go short now? Some guys, what they do, okay, I've already taken a trade, I will go reverse, I'll put a stop loss above. And there are third kind of traders, they don't care, they don't have stop loss, they don't know where price goes, they are still in the trade. Now once price comes to this zone, now tell me what happened to breakout traders. Where are the breakout traders now? The breakout traders did not win, the breakout traders got their trade. Correct? The breakout traders got their filling. At whose cost? So all their entry, all their limit order buys were all the stop loss of okay. Every breakout trader got his filling. Most of the times it is all stop loss of the S&R trader. All right. Now friends, let's say this was a power pattern. If it was a power pattern and a strong zone, what would happen? The zone will react strongly and price zooms ahead. Now what happened to all the breakout traders? All the stop losses are triggered and price moves ahead. So in the entire journey, they create an artificial zone. The institutions particularly stops anywhere. Okay, now does everyone understand an institution can move a price wherever they want? That is rule number one. Rule number one is an institution can move the price and place it wherever they want. Rule number two, the institution, in spite of their capability of moving a price wherever they want, they will not move everywhere because of ROI issues. Correct? Everyone agree? The helicopter can bomb the terrorist, but they don't want to kill them because of ROI issues. So they will wait for the opportunity. So here we have two kinds of people cheated. If you remember, in case of a QM, okay, it's more of maximum cheating of breakout traders. There's not much of support resistance traders coming into fight. But a fake out is a scenario where the SR traders as well as breakout traders are equally cheated, equally confused on both sides. Remember, both sides cheated, both kind of people cheated. Okay, now is this level over level? What is level over level? Can someone explain me the difference between level over level and fake out? Manish gave a lovely answer. Manish said no, because LOL is below the zone. If this is your power pattern, your LOL is below. It's below it, not above. That is the fundamental concept. So your fake out is above the zone, your level over level is below the zone in case of demand. In case of supply, your fake out is below the zone, your level over level is above the zone. This is very important. Everyone give me a check if you have understood this. Okay, Muthu says clarify once. Amit, I didn't. Tio, I didn't. Okay, fine. Let's get out of PPT now. Okay. All right. So friends, please watch this. Sir, what is this? Thank you. Sir, what is this? It is an authentic zone. Agree? No doubt. It is an LOL. It's a level just below the tradable zone. Correct? What is LOL? Any zone which is very close to the tradable zone is a LOL. Now, let me show something interesting. What is this? Now, price comes, breaks, takes the trade and goes up. This is flag limit. Everyone agree this is a trade. This is a trade we take. Entry, stop loss. This is your LOL. This is your fake out. Everyone get that? Everyone get the difference between fake out and LOL? LOL is always below the zone. Fake out is above the zone. Okay. Now tell me, what is the purpose of fake out? Purpose of fake out is to create more liquidity for the trade. LOL is not more liquidity. LOL is not artificial activity. LOL, there is already a level pending. I go there, pull it. What is the full name of LOL? It is level over level. Can we call it compression? No, I don't see any compression there. It's a kind of liquidity spike. That's fair. That I agree. Now let us see this. This is an SR line. Friends, what is this? This is an FTR. Thank you. Now, what is this? It is level over level. And this, okay, now remember, this is past. Everyone agree? This is past. Now, what the institution is doing, when they don't have liquidity, they bring the price, stop somewhere, create an artificial zone, and then make people to participate. And all the poor retailers would be fighting at that level, but the institution wants to trade at this FTR. You know what the next price does? The price comes down, breaks to the level, and zooms ahead. What did the price do now? The price came to the FTR, cheated the FTR, respected the level over level, and zoomed up. In this case, they created an artificial fake out, added liquidity by making a manipulation. They come down. Once they come down to the FTR level, they are still not happy. They knew below that there is a level over, there are some more orders. They went to that level also, took away every order, cheated the FTR also, and went up. Can you guys understand? Now, if you had ignored LOL, you would have lost the trade. Your stop loss would have been hit. If you had respected LOL, you would have got the trade. Now tell me, why did the price move to LOL? See, the institution wants maximum filling. Okay. In the first case with fake out, he created lot of fake scenarios. He got as much liquidity. But now when he went, he's still greedy. He took the price further level, lower side, took away the LOL and moved up. Ram says better look for LOL for all patterns. It is a universal rule. Out of 100 stop losses, you can save at least 40 to 50 just because of one rule, LOL. Manish asks, Ashok, is it necessary to take support 3 times? No need. It can be 2 times also. So always understand, fake out is above the zone, level over level is below the zone. Is that clear? Excellent. Amit made a brilliant statement. He says the gap between the FTR and LOL is so small, therefore the cost for the institution to take the price down is also very less. Perfect. That's absolutely the reason. Now imagine instead of here, the LOL was here, for example. You think the price will come down till this point? It will cost more money. They may not come. Yes, they may come when there was a bad news. Some corona something. The price could have deep dived, small reaction, deep dive small, and finally come here and take the price up because they got maximum filling here. Now let me draw one more last interesting scenario. I want to redraw. I want to put every damn scenario in this example. Now please answer me one by one. What is this? Okay, what is this? Okay, what is this? What is this? What is this? The price spiked from there, zoomed ahead. It's almost liquidity spike. And what is this? It is a QM supply level trade. Okay, excellent, excellent. Let me do this. Is it clear? Awesome. Now, how does the anatomy of fake out looks like? Yes, Divyakant, it's possible. It's a good zone. Drop base rally. The price. What is this? What is this? Excellent. It's not just a drop base rally, it is an authentic zone because it is a cap. Thank you. Now, the price is going up, but there's not good enough liquidity in the journey. So the institution is not happy. They want retailers to come and play. So what is the first step? Just create this zone. Don't you think to create this that it will cost them money? How many of you think to take the price and bring it down to the level to create that SR line, minor SR, it costs money? Don't you think it costs significant amount of money, friends, mind you? Now, once this is done, do you think they have to spend money for R2, R3, R4? Why do they need money now? They don't need money. The second one doesn't require any money. Why? The retailers will come and play. They require very less money. The same scenario holds good. The price reacted. All the SR traders shorting. The stop losses are all here. Very happy with the trade. Profitable moments. Breakout traders idle. Support resistance traders happy. The next, when price goes there, they take their the triple top trade. More shorts are added. Correct? More SR traders come in, right? How many SR traders are there who trade only triple tops and triple bottoms and not double top, double bottoms? Because they think skipping that is best. Correct? Now slowly the more and more SR traders are getting added and stop losses are increasing. And don't forget, when the stop losses are increasing, there are equal number of limit orders for breakout entry is there. Breakout long. Breakout long. So there are both orders are there. Why they are not executed? Why those prices are not executed? Because the current market price is below. Will that trigger the price move? Will limit order move the price move? No. Limit orders never move prices. What orders moves the prices? Only market orders. So price is below. Until and unless there is a push to upside, price there, those limit orders will not get triggered anytime. Okay. Now the story begins. The price goes up. At this time, the panic sinks in. All the SR trader stop losses are eaten up. They are all killed. Now all the breakout traders orders are triggered from waiting mode. They entered into the trade. Now they are all very happy. The price has gone up. And this is where the cap would react. Because that's a power pattern level. We have better trades because that zone authenticated, even in that zone, the cap zone, even authentic, engulfed a authentic zone. Not only that, if at all there was a zone here, for example, for some reason, okay, if there was a zone like this, say for instance, and then it comes like this and take up, there would have been another zone here. If it was there, what do we call this as? This is absolute LOL. So the price is very close to the zone. The institution, instead of reacting here, he could have gone here also and then react. Clear? Everyone understand why stop loss get hit, why price moves? So this is the whole underlying principle of price movement. Look at this simple example. Look at this simple example of a fake out. Now see this. See, here it stopped once, here it stopped once, here it stopped once. Now friends, understand one thing. This is why, this is what I used to call the pattern as Dawood pattern, because it's like this. So this guy is Dawood. Okay, this guy is Dawood. Okay, this guy is Dawood. This R1, R2, R3 are his three followers: Chota Rajan, Chota Shakil, and Abu Salim. So they will fight the enemy below. Okay, they will fight the enemy below. Okay, and when they fight so much, what would happen to this enemy? Don't you think he's tired? Don't you think he's drained out? Don't you think your enemy is weaker every time he comes closer to the power pattern? And when he comes here, this man is fully empowered, fully powerful with all equipment. When they come here, they are tired, they are drained, they are weak. What is ultimately? It's nothing but an arrival concept, no? Go back to your basics. Is fake out not a weak arrival concept? Compression makes your opponent weak. Now, will fake out not make your opponent weak? Same thing, no? Arrival officially should be weak. So fake out is fueling the weak arrival. So when they go there, naturally they're in for surprise. That's where the tsunami lies. Orders will get pumped. Was a saying in saying by Swami Vivekananda. He made a very powerful statement on a particular day of your life. When you're traveling in your path, you find everything is perfect, everything is fine, everything is working well, no hassles, no constraints, no barricades, no confusions, perfect clarity. He says stop, turn back, and watch your path again. You are in a wrong path. So when everything is perfect, question yourself, caution yourself. There can be probably your path itself is wrong. That's what holds good here. So when price comes to Dawood level, Dawood pushes them back. Yes, Urjil, that is the primary thought process. Now let us go back to the example. Now see this. Okay. So this zone is stopping the price. And the zone above zone, this is a very fresh zone. Okay. This is not a power pattern. And always see this is open is equal to high. It's a fresh and clean zone. Very clean zone. The point is in this whole scenario, okay, another interesting update by Manish is telling Ashok there's a nice QM pattern there which has been cheated. Yeah, it's cheated because there was a level over level, and that's what reacted. And friends, there are two kinds of things. Okay, so fake out also happens in a unique way. You must know this. I have not put the slides for this. This is case one. Case two is It can be like this also, which means the level of fake out, the location of fake out is not mandatory. Everyone get that? So the fake out can happen at multiple levels, multiple locations. It need not be like a classic example of a triangular pattern. Okay, how many of you remember 3 drive? Is it 3 drive? Sort of. Divyakan says yes. Muthu says yes. This is not a 3 drive. What is 3 drive? 3 drive is an compression approach towards the zone. This is vertical. There's a lot of difference between a fake out and a 3 drive. That's why I asked. Clear? Okay, sounds good. Okay. Look at this scenario. Stop, stop, stop. And finally, this guy came, kissed the zone and went out, and this guy also reacted. Okay, this is the entry. This is S1, S2. This is FTB. This is 2TB. So how does a anatomy of flag limit fake out looks like? SR line. Is that a flag limit? No, I will not mark small zone, base and all of that. I just put a line, you should be able to connect to the story. It's a flag limit, right? Now, price goes up, forms a temporary resistance zone, creates Chota Rajan, Chota Shakil and Abu Salim, all the 3 little dons, and our flag limit is Dawood, where price reacts. Is this anatomy clear? Any confusions? So how does an anatomy of FTR look? L1, zone broken. L2, base formed and broken. Yes, Anas. Is this an FTR? Clean pattern. L1 formed, L1 broken, L2 formed, base formed, L2 broken. Now when price goes there, it is stopped somewhere. A temporary zone below the power pattern is created. Chota Rajan, Chota Shakil, Abu Salim, and price goes to Dawood and react. What if your pattern here is it's much better. Already you have your enemy is weak. Okay, your enemy is already wounded. Over and above, he got corona. So naturally, he is weak. He is vulnerable. Amit says, does the fake out make the power pattern more powerful? Absolutely. It is not making the power pattern more powerful. It is making your enemy more weaker. When your enemy is getting more weaker, you are equally powerful. It is doing the job of compression only. Okay, you are not being powerful. The FTR zone is not getting powerful. The FTR zone is same, but the enemy, the opposite level, buyers are destroyed. Buyers are becoming weaker. Yes. Now look at this. An authentic demand zone. A very beautiful cap. Yes, Santosh. And then price creates Chota Rajan, Chota Shakil, Abu Salim. And when price goes to Dawood, he kicks the price back. Fake out occurs in illiquid stock? No. These are scenarios which are created in liquid stocks only. Don't ever go to illiquid stocks. Illiquid stocks will, whatever pattern, they're all fake only. They make no sense. Yes, Anas, liquid and high beta. There's a one crazy question from Muthu. Muthu is asking, what is the difference between FTR, fake out, and swap? Okay, let me draw it for you. This is your FTR. Number one, what is this? What is point number one? It's an SR line. Point number two, another SR line. Point number three, base. Point number four, FTR. Point number five, Fake out. Point number 6. FTR is broken under swap. What happened now? See, before when you say breakout of an SR line is called as flag limit. Now price comes into the FTR zone, make a base and broke. It broke a bigger barrier called as an FTR now. So point number 7 is trade in return, short here. So that is the difference. Swap is different. Fake out is different. Is this clear? Okay. Dinker, did you get the difference between a fake out and a swap? Fake out is something which happens to make the enemy weaker. It is fundamentally a liquidity creator for the zone. But swap is destruction of a zone because of a new news, like a tsunami, thereby looking forward for an opposite trade. Look at this example. This is a crazy example, friends. Very crazy example. Okay, this is that crazy day where Reddy Labs fell from 2600 to 2000. So almost roughly 20-25% fall. On that day, what happened? See here, S1, S2, S3. Price came down, kicked the FTR, went to LOL and picked the price. Imagine the pressure here. On that day, the order was so high, retailers were passionately throwing money on the system. What is the problem of institution? He took the price. He thought of taking the price from here only officially, which was good. But later he realized orders are so much. He thought, okay, let me go to the level lower and then take the price up. Divyakant says, sir, but to here LOL is almost 150 points. But see the amount of fall in a single day, they fell 25-30%. That day is an abnormal day. It's a daily time frame. It's a 25% fall on the single day. It's a big news day. Retailers were jumping. Imagine how many breakout traders would have been killed there. Imagine how many support resistance traders here taken a trade here. How many guys would have gone long? How many guys, breakout traders, would have gone short here? They're all killed. And the very next zone, see, this is momentum. This is rally. This is rally. This is rally. The next clean zone was only this. So he came, kissed, and single day he recovered. Cost is not very much high. There was no big cost for them. Not at all big cost, because that single day, the retailers were giving them extensive liquidity. They happily went down and kissed it and bought up. The big guys will spend money only when retailers are not there. That is a single day move. Think about it, 25% move. Definitely that day would have been a strong fundamental news. Everybody would have jumped in it. Look at this guy. A proper SR line, broken. What is this pattern, friends? It's a flag limit. Thank you. Okay. And then the price tested this region 2-3 times. And then it came into this zone. This is a trade actually. This is your FTB. Okay. This is your flag limit level. This is your source of engulf. Ashok, you got any tools with AMI broker to automatically find LOL and FTR? Sir, I can do for LOL, not FTR, sir. Finding the price structure is very easy. Rally based rally, drop based drop and all is no rocket science. But finding FTR is difficult because of the swing issues. And most of the zone which are drawn mechanically is always fake. They don't give the situation that we create. In the sense, our eyes makes much superior decision than a program. Okay, fake out is one of the simplest and practical aspects in price action. Level over level is not fake out. Hence, don't be confused. It is not fake out. Why? Because fake out happens in a different place far away from the zone, and level over level happens exactly opposite to the zone. And level over level is past. Fake out is present. How many of you agree? Level over level is much before forming the power pattern. Fake out is formed after the power pattern has emerged. Fake out always needs a resistance below or support above it. Stronger the SR, powerful is the zone. If there is a power pattern below or above a fake out zone, it is a lot more powerful zone. Why? Because this will make the arrival much weaker and the power pattern is poised for a longer return. With this, we come to the end of the session on fake out. I hope you guys understood it. Okay, now we'll start looking out for many fake out scenarios as examples. So before we move on, we'll pick a question from Shivangi. She says, means in FTR also we can see SOE. Yes, very much. Ultimately, source of engulf is not something limited to cap. What do you mean by source of engulf? Source of engulf means whenever there is an engulf, where is the source of it? From where did that big move come? That's the underlying principle. Okay. Ashok, can you show the summary slide again? Yeah, here it is. So Venkat says, Ashok, fake out and shake out. Can you throw some views? That's what it is. With the fake out, they'll shake out everyone and kick them out. They will destroy the positions. Sir, what if flag limit is formed at SR of fake out? Okay, I don't know. Let me give a try of it. What is the question? What if fake flag limit is formed at SR of fake out? Let me draw it. It's good for everyone. Okay, so For example, this is an FTR. Okay, is what the SR of fake out. Now let's say this is an FTR. Okay, now the price is coming. So our friend is telling, what if the price comes and does a is that the question? Ritesh, is this correct marking? Okay. Do you think this is a worthy zone? Orders are consumed, right? Tested so many times, right? Naturally, it has to break. On what grounds you say you will have orders here? You will have sell orders here. Okay. Yeah. Perfect. Next question. We'll pick up recent day chart. Looks like fake out. Sanjeev sir, I'll open it. Give me 1 minute. That is done. Is QM also a shakeout? No. QM is manipulation, direct cheating on either sides. It's not art. It's also manipulation, and fake out is also a way to create liquidity. You can call it as a shakeout, no problem. What do you call a spike above a tradable zone? Spike above a tradable zone? You mean no, I don't understand the question. A spike above a tradable zone can be a departure. Is that the meaning? A spike into the tradable zone is nothing but liquidity spike. Okay. So let me take AMI, or I will take trading view. Mm, um, give me 1 second. Mm, okay, Ashok Leland. Okay, this is a daily candle of Ashok. Sanjeev sir, where is the zone you're telling? Let me see this full zoom. Okay, for now, this is an SR line in Ashok Leland. There was another good SR line before. This is another good SR line which got broken. No, I don't see any. There should be some power pattern, no? The only power pattern I know right now here is this. Is a rectangle, man. Aha. Yeah. This is the only zone I have at 77, which is FTR supply. Okay. Apart from that, okay. Apart from that, this SR line, this coincidence, since this zone is very big, I don't want to take panga with it. I don't want to trade here, okay, because that level is already tested. Definitely it will manipulate. I don't want to play there. That's the only thing, sir. I don't see any fake out there. Wow. Brilliant statement by Amit. Amit is telling Ashok, is it not a flag limit which became an FTR? Absolutely. Why it's a flag limit? It's a flag limit because it is a gap. It is case 3. I strongly agree with you, my friend. Okay. Only reason is it gave a fake out. Here, this small candle, no, it gave a fake out and went down. Amit, you're right. Absolutely correct. Okay, Vikram says, Ashok, why not at 56 level? I am unable to make a judgment. I want very clean structure. I'm very, very, you call conjuice, no? The guy who doesn't spend money. In trading, you should be like that. It's such a big zone. How do I play it? Already see 1, 2, 3, 4 times it is tested. I will never take panga with market. Okay. Even price comes down. Okay, but one thing I'll tell you, friends, 30 is a great level for Ashok Leyland. Okay, um, you will see an era where you will never, you will see a situation where this will be remembered in history that I picked Ashok Leyland at this price at 30s and so on. When that scenario comes, you'll be so happy. But the problem is people doesn't have guts to buy now at such mouth-watering levels. Just about 1 week ago, one friend called, has extensive investments in what can I say, mutual funds. Now he's telling, should I remove? Should I cut off? I took almost half an hour to explain him the principles. Anybody having any mutual fund, if you are stopping today, that is the dumbest thing you do. Mind you, friends. The best time to continue your mutual fund is now. If you continue your investments in mutual fund now, then only you will make money. If you think, Ashok, 5 years already it is negative, don't worry. You will see positivity in next 5 years. You will earn more than what you are supposed to earn in 5 years. But if you stop today, that is the dumbest exercise that you ever do. So friends, if you look at it, see, this is, I'll put this line. Okay, this level is a very crazy level which got tested. Okay, and after that there's only one guy, this SR line with that base which is in the 30s, and I don't think anything below would be a problem. Even it's all base only, price will bounce back from that levels. It will definitely come back. Okay. And you can how many of you notice this monthly, this supply? Why I marked low 1, low 2, this one. So be careful with these levels. That's it. if you, that is a place to book profit if you are holding cash market. Okay, and if price comes to 30, I am going to put a limit order at 30, 33. How much ever comes, I will buy. I have some 10 stocks that I'm supposed to pick at some great levels, and I want to hold it for next 10 years, 20 years. But if it doesn't come, I can't help. Okay, 1 second, Ashok. In general question, how should I give weight to the previous and recent SR? SR in 1 hour was. See, friends, I clearly told, whenever you are playing anything, for example, you are trading on a 1 hour time frame. In a 1 hour time frame, you find an authentic zone. If you are trading in a 1 hour time frame, you should mark everything in a 1 hour time frame. Which means if there is an authentic zone in 1 hour time frame, you are happy. Now don't go to 15 minutes and do analysis paralysis at that level and say, oh, I could not find anything here. No, you go to a lower time frame only to reduce your risk, only to move your proximal line. Remember this point. But you'll always go to a higher time frame, like intermediate and higher time frame from your lower time frame, which is your trading level, to reconfirm if there are any zones. For example, look at this Ashok Leyland chart. Okay, now in this Ashok Leyland chart, there is a monthly FTR supply. All right, now when I go to daily, it's a very basic thing. Okay, when I go to daily, for some reason, let's say I'll take a marker. Okay, price goes up, forms a high, breaks out, comes down, and then go here. What is this? It is FTR, right? It's a beautiful fresh FTR, no? But will you take this trade? You are fighting a daily FTR with a monthly FTR, no? This is only small sanity check you need to take care. That's all. But don't go from this time frame. For example, one day, don't go to 1 hour, verify authentic zone, all that. You go lower time frames. Lower time frame, when I say it is below your trading time frame, you go below your trading time frame only to reduce your stop loss. Everyone get that? So that's the only key point. Sanjeev says, I have bought 3000 Ashok Leyland at 35. So profit is 70. Easily, sir. Book 50% at 70. There's every chance that price will play in between that range. Okay. All right. So with this, is for you to know that such a thing exists. Okay. This need not be a part of your learning exercise. This need not be a part of your practice sessions also. Okay. But please be aware, if some of you can find it, very good. Okay. In Quasimodo, we had two engulfs, one on the upside, one on the downside. In Diamond, there are four engulfs. Okay. There are four engulfs in Diamond. So which are they? We will study one by one. Diamond is a seventh power pattern in the advanced price action family. It's one of the most deceptive price structures in the market. Again, it is similar to Quasimodo. It tries to catch us both buyers and sellers, confuse them, create massive orders for the big guys. A prospective diamond is created when a QM is broken. Very, very important. Okay, whenever a QM is broken, a prospective diamond is created. QMs generally fail at key levels. Diamonds get created. When they are broken and reacts from the next level, the institution gets much more filling. Is it not? See, first of all, we all know QM is all about creating manipulations and engulfing on either sides, confusing the retailers, and then taking the price wherever they want. Imagine breaking that QM also. It is a lot more confusion, right? So let's discuss about the anatomy of diamond. That's when you will understand the concept. All right. Friends, price is going up. It forms a high. And then it forms a low. It forms an higher high. It forms a lower low. So what pattern appeared now? This is a QM pattern. For it to become a QM power pattern, probably we need an authentic zone here. Okay. Whose engulf will declare this is a power pattern. Correct? Everyone agree? Okay. Without the authentic zone, it is just a QM pattern and not a power pattern. Now, we mark the high and higher high, which we call as a Quasimodo zone. Officially, we look forward for a trade at the proximal line, which is called as a QML in our language, and the stop loss at the distal line, which we call as the MPL or the maximum pain level. Now, price went inside the zone. Instead of reacting from Quasimodo, it went ahead. Okay, it went ahead. Now what happened? The Quasimodo failed, right? So your trade failed. Your trade has failed. The supply QM is broken. One possibility you are seeing right now is if you take this as a higher high, okay, now you have a low, you have a high, lower low, higher high. So this can be a demand QM, correct? Everyone agree till now? Yes. There are three engulfs. Very good. Now, friends, I'll ask you a simple question. Will you take this trade? It is an FTR. Will you ever try to take this trade? Suppose price reacts from here, it breaks, and suppose instead of breaking, if it comes down here, will you take the trade? You should never take such a trade. Why? You have a huge supply zone here. You should never trade. Okay? Anyway, now let's go back to the story. The third engulf happened. It forms a higher high. It's a high, low, higher high is engulfed to form higher high, low is engulfed to form lower low, and higher high is engulfed to form higher high. Okay, now you have the three engulfs. Which are they? Engulf number 1, engulf number 2, and engulf number 3. Where is the fourth guy? Friends, draw some trend lines. Go back, apply the common sense of trend line theory and tell me which is the place where you can draw a good trend line. Where can I draw? Lower low to higher high. Excellent. Thank you. This is a trend line. Why this is a trend line? There are two valleys, valley 1, valley 2. So this is H1, this is H2, that is H3. There are two valleys, H1 is greater than H2. Okay, and the second trend line is drawn only when H2 is created. So H2 is greater than H1, and not only that, L2 is greater than L1. So because of that, I can draw this trend line. This is a trend line. This is also a trend line, correct? Anyway, that's how I visualize, but okay, that's a trend line. Now, this fourth trend line, that the trend line that you are seeing, engulf of the trend line is the fourth engulf. Everyone understand? High, low, higher high, lower low, higher high. Three engulf. The fourth engulf is engulf of the trend line. This one. This is your fourth engulf. 1, 2, 3, and 4. Can you find the 4 engulfs? Anything complex? Till now everything is same, friends. Till higher high everything is same. But from that higher high, which is your third engulf, once the QM fails, this is where QM failed. QM failed. From here, the price should come down and break the trend line. Once it breaks the trend line, the fourth engulf is completed. Now what we have to do is, you need to join these lines. Join higher high to the intersection point, higher high to the higher high. Now join all the points. Now if you ask me where is the diamond, can you see the top view from here? You can get to, you get the diamond shape. If you have a top view, if you have front view, you will not get it. Everyone understand? Fantastic. Okay, so I will join that line, this line, third line, fourth line, fifth line, and this intersection point is where we look forward for trades. So next time, that is the zone. That is the point of highest possible liquidity. The fourth engulf is the trend line, and when price react to that point, it gives a huge reaction. How many understood this? Should we repeat? Confused a bit, Divyakant. Okay, let us repeat it. Okay, if you don't get to, if you're unable to identify this pattern anywhere, don't worry. I myself don't really spend too much time on this, but this is for your learning. You need to know that this exists. Okay, friends, there is a Quasimodo. Step 1, high, low, higher, high, lower, low. Two engulf already happened. Okay, the break of the Quasimodo is a third high. This everybody knows. Now, the price has gone up from lower low to higher high. Here, you need to try and mark a trend line. And the breakage of that trend line will make or transform this script into a diamond. There is a breakage. That intersection point, you will start joining everywhere. That becomes a diamond. And the point of intersection, you take a straight line, and that is where you mark a zone. That is where maximum liquidity exists. And when price go back to that point, it will retrace. Excellent. Amit says, Ashok, if you don't get the base at the intersection, what do we do? Go to the source of engulf. This is the universal answer to all the people who have this question. If I don't see a base there, what do I do? Go to the source of engulf. That is the best one. Correct? All right. Here is the concept. Now, friends, the price comes into a zone. Okay. He says 3 drive to good to supply, but I don't see 3 drive here. I'll say 1, 2. The third drive I don't see. Okay. No worries. The price has approached a particular zone. Okay. And here, who is selling? SND traders, supply and demand, visual support resistance traders sell. Okay. It comes and engulf the low. So here, breakout traders sell. This is nothing but Quasimodo, nothing more. Okay. Don't be confused. There's nothing new here. We beautifully discussed in the previous example. Okay. And then price goes above to the zone and the price get pushed. It comes down. Okay. When price goes there, it comes down. If you ask me how to mark it, here it is. High, low, higher high, lower low, higher high. Can you make out? I'll take a normal color, maybe a brown or an orange or a purple. Try now. High, low, higher high, lower low, higher high. Okay, so the Quasimodo level is killed. Okay. And then you will generally draw a trend line. Generally draw a trend line. like this. Okay, and you draw a trend line. The trend line is also broken. Okay. Now, friends, there are two kinds of things. Number one, you know, this 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 particular pattern is similar to this is one kind of diamond, which is a traditional diamond. Okay. So what happens is, in the case one, which is the trend line concept which I explained, people wait for the intersection of trend line. In case two, people treat this whole thing as a structure by itself. They treat this as a diamond. This is your traditional way. Now, so once price hits the next lower time frame level, there are enough stops and buyers to fill the big guys. Massive short order price can then reverse. And what just happened is a diamond. Okay. What are the rules of diamond structure? Number one, QM is formed. Number two, QM is broken to form a higher high, okay, or a lower low. Three, price breaks the trend line, which is the fourth engulf. And finally, we trade on retracements. Let's take a simple example. Okay. Now, look at this example. Okay, this is an high, low, high is engulfed by higher high, low is engulfed by lower low, higher high is engulfed by higher high. Okay, till that much everybody is clear. And then I draw a trend line from the bottom. Okay, generally I can draw trend line like this and like this. Okay, but this trend line, this guy is already broken. Okay, you can even draw this guy like this. This is also correct. This is also correct. Okay, then what you do, join the intersection point. Okay, join the intersection point. Okay, then start marking it. I'm sorry, I did a mistake. Okay, let's say if this is the overall trend line, higher high to the top, point of intersection, straight line, join this, join this, join this. This is the top view of the diamond. And this is your entry. Okay, if you're able to identify a pattern, well and good. If you don't worry. Okay, and let me show one more thing. Okay, here you have a high, you have a low, you have a high, you have a low, you have a higher high, you have a lower low, you have a higher high. Okay, so high is engulfed, low is engulfed, higher high is engulfed, and the trend line is engulfed. And there is a mistake here. I don't know how many of you can identify. Trend line is engulfed. Think, we have missed one rule here. I don't know how many can identify. Okay, and then that intersection point where the trend line is broken. Okay, that is the point of action. So we will start adding all the points, joining all the points, and then form the diamond. Okay, Dibyakant identified the flaw. The flaw is the trend line. Accordingly, we defined a rule that the valley has to be broken. Thus, this guy didn't break it. Nor we have a good proper two valleys here to draw. This is the reason. Correct. Okay. So we could not theoretically, as per the rule book, we could not draw the trend line. But we have no option. We just drew it with available information, and price, when it comes to that point, it look forward for a reaction. Sir, one question. Divyakan says, can we trade after trend line break, and if price comes back to the zone? The source of engulfing from where the supply created and became the reason behind the trend line breakage. Okay, let me do this. Okay, according to you, you are telling the trend line breakage is this. Okay, price broke. Okay, the source of engulf is this. It's as good as same thing. Divyakant, it's almost same as what you discussed in this example, but in the previous example I am not sure. Let me check. Okay, if your trend line is broken, yeah, it's more or less same, dude. Even the source of engulf of this breakage of trend line is this only. It's nothing but the same. So your simplification is valid. Okay, and generally when trade happens, it's difficult to identify them because this trend line breakage thing is sometimes very messy. You cannot conclude logically. That is one of the key problems. That's fair enough. Okay, so these patterns are quite rare, friends. Okay, pretty rare pattern. If you can spot it, it can really give a good risk reward. But whenever a QM breaks, a prospective diamond emerges. Okay, that is what is the thought process, but it is never guaranteed. Don't ever think QM fails, Quasimodo the diamond came. You have two options in such cases. Remember. Okay, now we spoke about it: high, low, higher high, lower low, higher high. Okay, so in other words, this is it: high, low, higher high, lower low. Okay, this is the trend line which we were talking about. Okay, so always remember that. Now the funny part is the price, it can come here, can react, can go like this also. That is one part. Now or 1 2 higher high, lower low, higher high. It can come to the demand level here, take a trade and go up also. So every possibility is there. So don't make lots round figure conclusions. With this, we come to the end of this simple concept. Okay, basically the purpose is to explain you that this diamond pattern do exist. All right, so not much. If you are able to find few examples, well and good. Okay, and great. If you don't, no worries. Okay, Prakash wants to see the summary of the learnings. Okay, now post this session, friends, we will get back to the review exercises. Please line up all your example charts. Please paste charts, do not paste links. If you copy paste the image, it can open well. So see how others are posting and post like that, so that when I jump, your link will not miss. All right, so with this we come to the session of the program titled the Advanced Quasimodo Theory. So friends, in the previous session, you learned about Quasimodo, how a Quasimodo pattern look like. You also learned where is the double cheating, who are getting cheated, how are they getting cheated, and we also understood how to define an advanced Quasimodo power pattern with an attached authentic zone with it. So in this particular session, we will go deeper into the topics. We will try to understand different flavors of Quasimodo, which will give you an entirely new perspective, a wider perspective, and a logical perspective to the whole program. Okay, let's move on. Sounds good, friends. Now let's go deeper into the advanced Quasimodo. So friends, yesterday first session, all of us learned the double cheater. There is a high, there is a low, there is a higher high, and there is a lower low. At this point of time, we say that the Quasimodo pattern is established, and we called this level as QML, which is the Quasimodo level, and we also called this level as MPL, also called as maximum pain level. And then we look forward for a trade if price comes here. And not only that, once if any chance price forms a authentic zone, and if that authentic zone is broken, then we say that the QM is a very strong power pattern. And when price comes to the QML level, we look forward for a trade and expect it to react. Along the same journey, any questions so far? I hope everyone were clear with these things. So the crux of the conversation is the low was taken out by the lower low. Not only that, there would have been an authentic zone which would also be taken out by the lower low. At this time, you have a confirmed QM power pattern to trade. Okay, sounds good. Now let's go into the further learnings. Case 1. I am sure every one of you will connect with this story. It's pretty simple. and straightforward. We have a high, we have a low, we have a higher high, we have a lower low. All right, and then you have your QML, you have your MPL, and if price. So what is this, friends? It is compression with liquidity spike. Okay, it's a beautiful compression with liquidity spike. Okay, now imagine, just imagine if this was a authentic zone. Don't you think this is a very powerful power pattern, at the same time fighting with an enemy who is very weak? A weaker enemy and a stronger you. So definitely there is a extensive imbalance between the strength. You have been superiorly stronger because of you breaking the authentic zone, whereas your opponent is coming with so much of compression, they will be assaulted. Sounds good? Very clear, simple. Shall I move to the next case? Okay. The second case is the mother and baby. Can you explain me what is a mother and baby QM? Any thoughts? Amit says Harami pattern. Ram says Harami pattern. Amit says QM within a QM. Small and big, inside candle, outside candle, nested candle, lot of perspectives. Thank you. Please give me your attention, friends. That is a minor SR. A high is formed. A low is formed. Higher high is formed. Lower low is formed. Do you observe something? Any observation, friends? That is the QML. That is the MPL. And when price comes here, I look forward for a trade. Do you notice anything? Friends, what is this? It is a QM. It's a small QM. This QM is called as baby QM. Where exactly is that QM forming? Can somebody imagine? Most of the times it happens at the QML level. Is it happening at the QML level? Now think about the same story. This is the high. This is the high. Okay, high got broken. All breakout traders took trade. Stop losses here. Okay. Then here, this is a low. People go short. Stop losses here. So the fact of the matter is, friends, in case of a high engulf, in case of a low engulf, there is double cheating. But here, in case of this small high engulf, in case of this small low engulf, there is more cheating here, deeper cheating. I'll ask you a simple question. Suppose an individual is suffering from fever. He's going on the way to hospital. He meets with an accident. Don't you think the pain is severe? It's like two problems came at the same time. How will he sustain? How will he even stand on his for two legs? Okay, and exactly at the QML is a high liquid region. There, imagine a shorter form of manipulation happening. Imagine the kind of liquidity that would prevail here later. So that is a liquidity we look forward to it. This is one of the most powerful stuffs, and imagine if it comes with compression, nothing like it. That is why generally I say many times, if you remember, buy next month option. I'll never say current month option. Yes, I agree, some options you will not have liquidity next month, but put a limit order. You never know. Put a limit order, it might get executed. The point is very, very simple. That is a point of extensive liquidity, huge amount of selling orders available, and the price goes up with compression, it will fall. For example, there are times where our people have suffered. What they say, sir, again it faked out and came all the way down. If you buy an option, you don't have that headache also. How many of you agree? When you buy an option, two things will happen. Number one, your loss is fixed. The premium you have paid might disappear. The loss can never be beyond that. Like in futures, it's not unlimited. Second, any fake out, you don't bother. It doesn't shake you much. Okay, so the crux here is the baby Quasimodo. Now, let me draw something for you. Before, if you had seen some lines, you would not have understood what it is. Now you'll understand the mountain theory. So now you just put a straight line here and you will know that, okay, this is the high level, this is the QML level, this is the MPL level. I can take short here. 2 weeks back, if this was the chart put, you'll be wondering what is this. A moving average line might officially go like this. It can never capture the peaks. Okay, sounds good. So let's move on to the next use case. The baby and the mother QM on the demand side. A low is formed and high is formed. A lower low is formed and higher high is formed. Now, when price comes there, we look forward for the reaction. Okay, you have your QML, you have your MPL, and that level, the QML of the baby is called as QMM. Kindly make a note. The QML level is this, no? But for the baby, this is QM, no? This is the QML of baby, no? How many of you agree? This is the QML of baby. This is the MPL of baby. Agree, friends? Can you give me a check? So there are three things: QML, QMM, and MPL. So generally, the MPL of baby is not significant because ultimately the zone marking depends upon how the formation happens here. how the formation happens here. Any formation can happen. We have no idea what would happen. Correct? Is it not true? At the zone, the purpose is to find a very clear price structure, either a DBD or a RBR, an RBD or a DBD, and it must be a fresh zone and preferably an authentic zone. So these are our hierarchies, friends. When these things are confirmed, then the probability is always more. If it's a fresh zone, we are close to a better win rate. If it's a authentic zone, we are closer to it. Anyway, sounds good. Now case 3. Friends, what is this? What is number 1? Number 1 is QML. Number 2, MPL. Number 3, baby QML, also called as QMM. Okay. Now, let me ask you a simple question. Can I take this as L1? Can I take this as L2? And can I call this FTR? How many of you agree this is an FTR? How many of you don't agree it's an FTR? Meenakshi says no. Okay. Everyone says yes. Anybody else who support Meenakshi? Ramdas says no. Nishant is playing safe, 50-50. Bala, Amit says no. Dinkar says no. Yes, it's a no. It is not an FTR. Now tell me why it's not an FTR. Friends, why it is not an FTR? Because the high is broken. What is an FTR? Why this cannot be an FTR? It is because, is FTR not a trend continuation pattern? It should have been like this. If I redraw this, it should have been like this. Go and touch this peak, come down. Okay. It should have been like this instead of this. This you can call as an FTR. Everyone agree? Can you all please give me a check why it is not an FTR? Okay, see, these are all important aspects which you should notice. This is not a continuation pattern. Where is continuation here? It is confusion. I don't mind calling this as an FTR. This can be an FTR. Okay, don't miss the essence. Don't miss it. That is why we always say, you think it's a pattern. Okay, we give up. We don't realize and try to understand why it's defined like that. See, in first look, everyone, all of us felt it is FTR, but in reality, it is not. Okay, sounds good. Let's go back to our conversation. 1, 2, 3. Okay. Now, what is this? What is 4? 4 is QML. What is 5? 5 is MPL. What is 6? Okay, are you able to connect? The trade is moving from a Quasimodo to a Quasimodo, a QM to QM travel. Now in this scenario, you can take this as an entry, short, stop loss. You can take this as target, and again you can go long here, stop loss here, and take a respectable target. And imagine if this is a compression, for example, your target can be here. So you go short here, okay, with stop loss here. You again go long here with stop loss, and you book your profit here and come back to square one, and you book end-to-end trend. Everyone understood this? Can you all give me a check if you have understood these lines? Sudipta asked, can we take both side entry? Yes. Okay. Now, sir, FTR concept not clear. Okay. So the FTR thing is simple. L1 broken, L2. Vikram, is this FTR clear? Okay, I repeat the same example again. L1 L2, is this an FTR? That is all. The point is very simple. Can you draw a trend line here? Apply the principles of trend line, draw the trend line here. For downtrend to draw, you need to have two peaks. Okay, the H1 should be greater than H2. Okay, the low one should be greater than low 2. Similarly, can you draw here? This is also wrong. This is also wrong. Is that clear, Vikram? FTR is a trend continuation pattern. It comes back because of urgency, picks orders and rushes out. It doesn't go to the bottom. In simple words, if I have to say, the bus which picked up a bulk quantity of people in the bus station was going on the way, and suddenly somebody says, sir, a small deviation, you can pick up more people. He goes. Will he ever go? Will the bus ever come back to bus stand? So in this case, the bus came back to bus stand. So it is not an FTR. Is that clear? Okay. That's the QML, MPL of the supply as well as demand. And now let's talk about case 4. The QM with a fake out. High, low, higher high, lower low. QM pattern. That's a QML. That's an MPL. Now, price, instead of going to the zone, it creates a temporary fake zone, creating R1, R2, R3. What do we call this pattern as? Yesterday we discussed. So this is Dawood. Okay. Chota Rajan, Chota Shakil, Abu Salim. Okay. So that is in a nutshell with QM with fake out. Now imagine an authentic zone here. Imagine a compression here. Imagine the power of those levels. Enemy becomes weaker and weaker, extremely weaker. That is the essence of whole journey. Fight with a weaker enemy. Now I'm going to draw the big story. What is this? What is 1? What is 2? 2 is an authentic zone. What is 3? 3 is QMM. Awesome. What is 4? What is the whole thing? It's baby QM. Thank you. What is 5? What is 6? What is 7? So we take a trade here. Okay. Good. Did you guys like it? Shall I delete it? Move on. Any questions so far? Okay. There's a question, sir. In this case, can I take a trade at QMM? No, because at QMM only this reaction came. I thought somebody will ask me this question. Thank you. The fake out is happening exactly at QMM level. Okay. So we'll go to examples in some time. In case of authentic zone, it can be cap also. Of course, it is a cap. A cap is a subset of a Quasimodo. How many of you will understand this? I had written it long time ago. I wrote a proper example for this. How did I write? I wrote a high, low, and then what I did, I took another color. So this is an authentic zone. This is your cap. Rally, base, rally, base, and a drop. Now I'll go and take some other color. This is your high, low, higher high, lower low. So the whole thing is a QM, the red thing is cap. Okay. There's a question from Urjil. He says, Ashok, in terms of price action, how relevant would be a 10-year-old QML? Even a 50-year-old QML matters. Because it is all driven by psychology. Okay. Think about the 2008 peak of Reliance. Go and check what happened to that level after Reliance came there. See what happened. It broke out, it came back to the same level, and then only it rallied further, which means price remembers history. Okay. Now there's a question, but why will pending orders be there? No, it need not be pending orders. It need not be pending orders. It can also be the emotion of the investors. Think about it. 10 years back, I invested in a price. Okay. After 10 years back, when price comes to that level, many times all these Gujarati investors can say, Bech do. Don't you think? At least my buy price has come, sell it off. Correct, na? Many people will think like that. When the price comes to that level, and if they sell it off, what does it mean? That is nothing but a double top. And then once the fundamentals change, once a breakout happens, that's when the new breakout trader comes in. And then a new journey will emerge. I'll show that in chart of Reliance. Okay. So one thing is, I guess we spoke about fake out. Okay. So what we told is, okay, what we told is a fake out can happen at multiple locations. In yesterday's fake out session, we spoke. So it can happen in the beginning, it can happen in the middle, it can happen at the end also. All right. So it is fair. It can happen anywhere. Now QM has interesting possibilities. Now give me your attention. Focus on this scenario. What use case is number one? It's a baby QM scenario. What about number two? It's a normal typical QM scenario. Now check number three. Now tell me, how do you address that? That is also a normal QM. Instead of taking this as high, you can take this as high. That's it. Anas gave a brilliant perspective. He says, I can visualize 3 as an FTR. How? H1, H2. Okay, this is your zone, tradable zone. Price comes down, swap trade. Ultimately, is it not same? The swap is nothing but a QM. Yes, some people are telling it is a flag limit or FTR. Don't worry. Since high and higher high are very close to each other, we have that confusion. That is fine. Ultimately, that's a power pattern point. The swap is nothing but a QM. Now look at this guy. High, low. You don't have to take this high low. If you treat this as high, low, higher high, lower low, and then this is your QML. Shivangi, yes, very much. Any questions so far, friends? Sounds good. Yes, Bala. The baby QML is nothing but QAM. These are all multiple flavors. You know what these guys throw, Viru? Basically, when you look at the exact structure, sometimes your price structures, RBR, RBD, and all those things will vary at the QM level and QML level. So when we do examples, you would come to know. Okay. Now, friend, this is example one. Now, point number one, this particular issue is happening near SR flip, correct? These are flip region, no? How many of you agree? Resistance becoming support. Okay. Now, look at this scenario. Okay. High, low, higher, high, lower, low, and look at this fake out. There is no R3. There is no R3 in this example. No, there is no Chotu QM here. Now look at this example. Okay. Here, QM is forming after a significant drop. Everyone agree? Whenever QM forms after a significant rally and significant drop, it will have lot of strength. That is point number one. Because we spoke about the high probable areas of liquidity. Okay. Then it formed a low, high, lower low, higher high. And now look at this. Can you look at this drop base base rally? This rally base rally exactly is coming at your QML level. Everyone get that? So we mark this as the zone. The entry point. Now look, check out the fake out. So here again, this is a point of SR flip, high, low, higher high, lower low, and then R1, R2, R3 came. This is one example. Okay. Okay, this is one example where there is compression, liquidity spike, complete compression, fake out, everything is there. But there is only one aspect in this whole journey. Okay, this is a concept thought by Mansoor. Okay, we are still trying to unlock his thought process. Many times he will define a point called zero float. Okay, he says he marks a point and at that point onwards price is falling. We are trying to hard to visualize understand his thought process. Okay, so sometimes he marks a point and he says this is a point where there's very less pending orders. How he is telling, we are trying our hard to understand because he talks more in Malaysian language, he doesn't talk Indian. Okay, we have done many translations also, we are trying to learn. Okay, he is one of the best QM players in the world, I know. Okay, I would definitely respect him for whatever literature he has gifted it to the trading world. It's phenomenal. Okay, and we are still improving. Okay, so this is high, low, higher high, lower low. Okay, exactly here there is R1, R2, R3, which is fake out, the Dawood pattern. So the top of the QML is marked as the entry point, which is this, and this is the stop loss, and price comes into the zone and drops. Dinker is asking where is the authentic zone here? There is no authentic zone here. Okay, if you ask me personally, this is your drop base rally. Maybe this is your authentic zone. Okay, Dinker. Look at this clean example. I guess this example is very, very simple. The candlesticks are so simple structured. Higher high, lower low, R1, R2, no R3. So it need not be R3 all the time. And the entry came here. And if you guys notice, these are all compression. This is compression, this is compression, this is compression, this is. So your target can be this point. How many of you get it? How many of you notice the compression markings here? For example, okay, drop, this is compression. Okay, rally, base rally. This is compression. This is compression. Everyone agree? And this is compression. So this whole region is compression. So these are scenarios where we can easily look for 10x trade. The results will come very fast. Up to the base of the compression. If you ask me personally, this is a base. This is not test. This is tested. This base is also tested. So theoretically speaking, the base of compression is this point. This point. And price did come there. Target can be always base of compression. See, 1:5 if we can target, that is more than enough. Right? Sounds good. So this is not QM in a QM. Look at this example. See, even here you don't have R1, R2, R3. R3 is missing. Okay. So 2 R's are good enough to declare a fake out. 3 R's came, definitely it is good. And that too, this QM came after a significant rally. Higher high, low, higher low, higher high, higher low, higher high, lower low. So Amit says, Ashok, can we say if there is R1, R2, the pattern is very strong? Of course. What is R1, R2 doing? R1, R2 is making your enemy weaker, right? R1, R2, R3 is just making your opponent weaker, nothing more. It is resisting, it's fighting them out. When ultimately price come here, Dawood is relaxing here. He is super strong, he is free, he is strong. Okay, he is not injured, he is empowered. Whereas the enemy has drained, struggled, fought, wounded. Naturally, they will have a tough challenge. Correct. Okay, this is one of the classroom examples. Okay, so we cannot consider this our way because there's a lot of changes that has happened for us. This is our high low, higher high, lower low. This is our zone. We have to officially wait here. Okay, that is point number one. Now if you ask me personally, if this I take it as, I'm sorry, if I take this as L1, I'm going to reframe whatever he has drawn, L1, L2. Okay, what is this? Yes, Urjil. So that is an FTR. Okay, this is an FTR trade. Okay, that is one point, one learning here. Okay, that's what it is. Because if you try to take any high low, higher high, lower low, then life becomes complicated. Okay, we will definitely complicate it. We'll have to keep it very simple. Here is an example with compression and liquidity spike. Okay, this is a QM. Can anyone tell me why in case of QM we declared that we don't require engulf? It's cheating. It's instant cheating. The instant cheating is more beneficial for liquidity. Yes, Amit, shoot your question. Okay, my question is, when we declared that in case of a QM, I don't need an engulf, even breaking of a high is enough. What was the purpose? The purpose is urgency. The purpose is cheating. The purpose is manipulation. Okay, why would a cheater will come and tell you, hey dude, I'm going to cheat you today? You'll be alert, right? Why will a thief call you and say, sir, tonight I am going to rob your house? He will not tell you. The thief come in disguise. He doesn't inform. You will know only after the thief comes in. And please observe, this is another QM which is happening exactly at the flip region. Okay, there are two superior forms of QMs. One is this, the second one is this one. Understood both of it? Friends, did you understand these two flavors? Can everyone give me a check? The first one is after a significant rally, which is the best QM. The second one is a flip. Shivan, it's a flip. A QM forming at the flip zone. That is the best manipulation. Okay, so this is an example of Balakrishna Industries. Low, high, lower low, higher high, and here you have Chota Rajan, Chota Shakil, Abu Salim, and finally price comes inside the zone, kisses and bounces. This example is a very clear example. It's a very clean and clear example which where you can connect. Okay, low, high, lower high, lower low, lower high, lower low. So Ritesh asked, how come institutions operate in all time frame? How come means they have money, they'll operate. How can I say? How do I respond to that question? Okay. Okay, one good observation from Sanjeev sir. Sanjeev sir is telling the S1 is formed uh, before H is formed. That's a good point, sir. Pretty good point. A very nice observation it is. Now look at this example, friends. So this is low, high, lower low, higher high. Okay, which is a demand QM, and again once it rallied, high, low, higher high and lower low, which is a supply QM. So the price is was playing in between the two. Okay, so now it's fighting between the two. Wherever it touches, you can take a trade and wait for the opposite guy to emerge. And there's only one thing here. There is one small concern. There is a level over level. That's all. Stop loss should be here, safer side. This is an example of Ambuja cement. For instance, this is the SR flip level. It formed a high, low, higher high, lower low. This is the official QML. Okay. And this is also a QML zone. So that is why what I did, safety, I took this as QM supply. Okay, I need to ensure that I add this also for stop loss purposes. LOL I cannot ignore, but here there is no, it's pretty safe zone. Okay, low, high, lower low, higher high. The price comes, touches the zone and moved up. So it slightly gave a fake out. Check it, Ram. Check it and tell me. Okay, this is an ACT chart, ACC chart which I marked. Okay, last time. So the beauty here is, can you see this manipulation? What is that? That's a baby. That's a QMM. You go on a lower time frame, you will see a proper QMM there. Everyone understood? And look at this example. This is your QML, price come and tested there. Officially, this is the zone. Okay, I would have taken this as the zone. My entry would not have come. Officially, my entry would not have come because I always trade wick to body. I don't trade wick to wick. So those of you who trade wick to wick might have got this trade. Why? Because this whole wick is a part of the zone. And QM is one more topic where I'm further going deeper. In the subsequent sessions, I'll have to come back to you and invite you for more learnings. I myself learning, I have almost like 25 hours of literature only on QM. Uh, again, learning the whole thing, putting it in perspective, simplifying the whole concept, offering with a rule book, that is the biggest challenge. Eliminating the subjectivity, discretion is the nightmare for me. So I'm in that process right now. So probably in the subsequent quarters, you might get an update from me on probably new sessions on QM alone, because QM is my topic of research, because it's the best form of manipulation. I am in love with QM. If you ask me personally what I like QMs and FTRs, mainly QMs. So this is a Bemel trade which happened last year. And this is Berger Paints. Now can you make out the power of this manipulation? What would have happened to these people here? He faked out of hardly 1 point. The previous high would have been 335. Okay, he made 336 or something and went off. But this is a danger. This arrival can be dangerous. In this case it worked, agree, but generally this kind of arrivals are dangerous for our trading. You never know when they hit us hard. And this is one trade which I have plotted, waiting for it. The zone should be like this for me. I don't know why this is marked like this. This should be my zone. Okay. Even if this is my entry point 1183, stop loss should be here. This QM is one thing, friends. Once you understand all flavors, this is one pattern which gives maximum RR. That is why I'm so excited about it. To be honest with you, my vision is not to play Quasimodos on intraday time frame. My vision is to play futures on a higher time frame, preferably daily or even weekly for that matter, and roll over the future for few months to really to extract the juice out of it, to achieve the RR of 1:5, 1:10. But rolling over also require a lot of guts. I'm not denying that part. Look at this. Open is equal to high, telling strong selling pressure there. Very fresh zone. I just took the high. I marked the body. Sensible. And this is Balkrishna Industries again. I just marked this zone. Okay. Look at the departure. And there is a clear manipulation there. So the best way to trade these levels is play options. Trade put option and relax, so that any fake out you are not shaken and your loss is also limited. Okay. So what are the scenarios we have? One is QM with compression, QM with baby QM, QM with fake out, QM with multi-location fake out, and series of QMs. Dinesh says, can you explain open is equal to high concept? Sir, open is equal to high is nothing but a scenario where there are no exchange of price above the open. All buyers are destroyed, no? When open is equal to high happens, there are no more buyers there. That is why price came down. So the level above it definitely will have a good amount of orders. Pretty bearish. Sanjeev says, Ashok, instead of buying a put, sell call is good. No. What if it fails and you have unlimited losses? You hardly get 3% to 5% by shorting a call, and if something goes wrong, you'll lose more. Sell call is fine in options, particularly Nifty, Bank Nifty. Don't try them in stocks, because stocks can move 10%, 20% in a single day. Remember, stock market, Nifty cannot move. Okay, Nifty, Bank Nifty, we don't move 20% in a single day. But there are hundreds of stocks which go 10%, 20% in a calendar month. So you should not take that stunt. Prakash says, how about protective put and call? Yeah, maybe you can try that. There's an interesting question from Chandra. He says, sir, your R1, R2, R3, should they be lined up in the same level? Yes. If they are at different level, what is the point? For instance, when I am trading a power pattern, for example, this is my flag limit. The price is coming here, and then it comes, takes a trade up. That is good. instead of that, the same SR line, base formation, price went up. Now if it does this, there is entirely a different pattern here. Don't you think so? Okay. So Shivangi says, sir, in Berger print there is cheating, in Balakrishna there is no cheating. 1 second, buddy. I'll open it for you. Are you talking about this one? Why no cheating? This is low pa. This is your low. This is your lower low. Why do you say there is no cheating? Higher high traveled more. Yeah, how does it matter? See, once your high is broken, this level your higher high is already formed. After this, whether it goes here or here doesn't matter, no? If you ask me, according to the principles of price action enhancements, from a zone, if price travel too much, it is good, no? Longer departure is good, no? You remember? We discussed that from departure, it has to go far. Let it go. That is fine. Ultimately, irrespective of what it is, the maximum pain and manipulation is done there. No, people there are already confused. Next time price come there, definitely they will have to face the heat. So Vinay says, when you buy an option, do you buy when the strike price is near to our entry price? Yeah. What we can do is, when the price comes into the zone, you take the nearest ATM call. That's it. Vinay, is it clear? Generally, I don't recommend OTM because OTM, the probability of success is less. Okay, so when it comes to trading also, we need to learn the arts of position sizing, risk and money management, the betting philosophy, the dynamic position sizing, and there are a lot of concepts that we need to still know. Okay, so you have learned just price action strategies. Now in the subsequent session, we will learn how to reduce the RR. I'm sorry, how to extend the RR by reducing the risk, how to have a predefined betting size, what is the pulse rate of my trade. There are so many concepts lined up. So once you learn everything, and then only the whole story will emerge for you.